I think information that was previously available to institutional investors are now available to retail investors. So this has created a level playing field for retail investors. The key problem now is that retail investors have too much information. So the key thing is about discerning which information is useful to make better decisions.
I think Singapore investors are pretty well acquainted with some of the household names, some of the well-known companies that are listed on the SGX, like ComfortDelGro, DBS. These are companies that Singapore investors know very well about. But if you talk about small cap companies and companies that are perhaps less well-known to the average investor out there, I would say there's still much education that is required to inform our investors on what these companies do.
There's been huge volatility in the market. Investors are especially worried right now. Is there an impending recession to global economies?
I believe Singaporeans are predominantly savers, and for those who invest, they have a tendency to invest blindly. So there's really a need for them to upgrade that financial know-how and to learn more about financial issues through reading credible reports, research reports, and reading good articles about investments.
In terms of investing in the Singapore market, we believe that some of the key sectors will be your banking sector as well as your property and Singapore REIT space as well. So I think within that space itself, investors can actually kind of read up more on those sectors to actually come up with any interesting ideas within that space.
An enormous amount of opportunities in the Singapore market because a lot of stocks are undervalued. If you look at the latest data, 70% of MSCI Singapore stocks are now trading below their 10-year average price to book, and 60% are trading below their 10-year price earnings.
For me, I'm a firm believer of the small mid-cap space in Singapore. We do believe that there's a lot of good value companies, good quality companies, especially the small to mid-sized ones. They are being neglected by the market because of their market cap as well as their trading liquidity.
Because here what the exchange has done is they have been pushing out in terms of transparencies of companies. Of course, all the regulators have done that as well, and hence investors can get comfort in terms of the material to understand companies better. There's a little bit more support here relative to other markets in the region.
As an analyst, we try our best to kind of navigate this path for investors, trying to kind of put them in the right place, be it in a safe haven asset or risky asset. Right now, being in this volatile environment, I think it's a pretty interesting time for investors, and I think it should be a wise strategy to be nimble in the equity market right now.
Our selection criteria is based on three main criteria. First, we look at undervalued companies. Second, we look at company with near-term catalysts, and third, we look at company with good operating track record.
I use both technical and fundamental analysis in my work, and I believe in the Warren Buffett quote, "Be fearful when others are greedy, and be greedy when others are fearful."